everybody. Welcome and thank you for joining us for our latest Ask the Expert session. I'm Laura.Gilsdorf, Realtor based out of Evergreen, Colorado. I'm with Madison and Company, and I service pretty much the entire Front Range. And with me is LeAnne from Universal Lending. Say hi.
I'm LeAnne with Universal Lending, and I cover all of Colorado and currently Arizona.
Awesome. And weren't you in line to start covering another state?
Yes, Texas. That's coming soon.
Okay, cool. So coming soon for all of you in those states, LeAnne is the best to work with. And she's got a hot topic today that we're going to talk to you guys about, which is where interest rates are at, because it's been a hot topic, as I said, for all sellers and buyers, and has influenced the real estate market significantly over the last year. And so without further ado, LeAnne, tell us where interest rates are at right now.
So it depends. That's probably the question I get a lot. And interest rates really are dependent on your credit score, how much you're bringing down, what programs that you are doing. Are you doing VA, FHA, conventional? All of those make a difference. So when you turn on that TV and you see the headline that says interest rates are at 7% or 7.5% or 6%, that's not necessarily the interest rate that everyone is getting, because there's so many different factors that go into what interest rate a borrower will get. Now, with that said, interest rates are increasing. So I would say, on average, we're in the sevens right now, mid to low sevens, just depending on, the qualification of the borrower. It can be different. And if I was to make this video at the beginning of this year, I think everyone, everyone that watches the market was saying, okay, interest rates at this time will probably be in the fives, mid fives. They went up and down, and that's what they were thinking. You probably heard that a lot too.
Yeah, definitely. I mean, there's been a bit of a disappointing shock factor, we'll say, that we're still seeing things in the sevens and potentially, looking forward to another pricing or interest rate hike. I don't know. We have no crystal ball, right? But this is where we're at. So now we got to do the best that we can.
Yeah, and there's programs out there, and people are confused why, and a lot of it just has to do with the state of our economy. It was inflation that was driving the interest rates up. Inflation still is an issue, but right now it's the amount of debt that we have.
Yeah, I just saw a statistic this morning, actually, that credit card debt from all of us has reached over $1 trillion.
Yes. So that debt piece is scary. And when we talk about interest rates, it's funny because everyone just assumes we're talking about home loans, because I think that's the biggest sum of money that someone could take out. But I mean, it's interest rates for everything, your credit card interest rates, your HELOCs, your car loans, and everything that you can take out financing on has an increased interest rate. So that debt piece is a big driver right now on, why they are increasing interest rates.
Yeah, and I think, just to put it plainly too, for everyone watching, it's debt because many of us are still spending whether or not we have the money. And so the demand is still really high for all of these goods and all of these services. So there's not really that impetus. And I don't know about unemployment at the moment, top of mind, but all of those factors, like you say, do play into where our interest rates land. And it is, you're right, for everything. It's not just a mortgage interest rate.
Yeah, absolutely. And you're right. Consumer spending is huge. I mean, consumer spending is still up. People still like buying all those goods and services. Unemployment, it wasn't where they thought it would be. They thought it would be a little bit higher, but because of the food service, your um, restaurants, your hotels, I mean, people are still going out to eat, people are still going on vacation. So all of those industries, the hospitality industries are still hiring
Yeah.
and they need people. So we're not seeing a huge unemployment increase.
Yeah. Yeah, which is a double-edged sword, right? Because we want
Mhm.
everybody to be employed, but
Yeah.
it's just one of those statistics that does have an effect on our economy. So as long as unemployment is down, that plays a role into what we're seeing in our interest rates. But I would like to touch on from a more intangible perspective as the realtor in this conversation. There's always going to be conversations on what can I afford based on these interest rates. And so that plays a big factor because we were spoiled for a while to have super low interest rates in the twos. I mean, I know at that time I refinanced, I got like 2.35 or something crazy like that. And so it set us up, even though it was a brief time in history, it set us up mentally and emotionally to think, well, that's what's possible. I want that. And if I don't get that, then I'm going to hold out, right? Not sure, not going to get into the psychology on all of it, but those are the active conversations I'm hearing and part of with a lot of buyers and sellers. And I bring that up because I want to remind everybody that while interest rates are a huge portion of your decision and whether or not to sell your house and relocate or to buy for the first time, it's not the only thing. It's not the only factor. And no matter what, if you're owning a home, there's always going to be a little bit of a silver lining over renting because all that money, regardless, is still going to come back into your pocket at some point in time. Now, this year, we expected, because of all of these interest rate calamities, if you will, that the equity proposition wouldn't be as high. But if we look nationally, most of the country is still 3% higher in value over where we were this time last year. So that equity is continuing to increase. It might not be the 10 to 20% we saw in the crazy times, but we're still seeing equity increase, which means if you are investing into yourself and investing into a home, you're still going to end up seeing that return come back to you either through equity, through home ownership, or through selling down the line. So just wanted to send a little reminder that it's still possible and it's still very viable for buyers and sellers to do things in the real estate market today as things stand, even with the higher interest rates.
Yeah, and there's different programs that, we have something called a 2-1, 3-1 buy down where, if the seller's willing, they can help buy down that interest rate for 2 or 3 years or 1 year. Um, and we have programs, help with down payment assistance
Mm-hmm.
where they need to bring 1% in. We have program, that helps us bring in 4%. I mean, we have a ton of different programs. We can buy down your rate. There's a
Yeah,
lot of things that we can do to help you get into a house, no matter what the interest rates are. Now, can it cap, how much you can qualify for? Yes, absolutely. And that's something that I work with my buyers on, as the interest rates go up and down, your purchase price can go up and down.
definitely.
But I've done a lot of quite a few 2-1 buy downs lately because people have found homes that have been sitting that need some work. And instead of lowering the purchase price, the seller's willing to help buy down that interest rate for those few years.
Yeah, absolutely. And that's another role I play with my sellers and my buyers is to look at the facets of not just your particular situation, but the market and what's going to attract the right buyer or the right home for the buyer. And looking at all the different ways that we can make your situation really work out to the best benefit. Because as a seller, sometimes you might think, oh, I need to do a price decrease, or I need to be really competitive on pricing in today's market. That may or may not be the case, because there might be other options like these 2-to-1 buy downs and things like that. And I do have some margin of flexibility in what I'm legally able to advertise in that realm. So if we have a lender partner like LeAnne, and there's a particular program that you want to utilize as a seller to entice buyers to come in, we can use that in our marketing to get even higher views and even more showings.
Yeah, absolutely.
Cool. Well, I think that's really all there is to say. We could probably go on and on in terms of interest rates, but if you listening and watching have any particular questions about your situation, feel free to reach out to us. As always, we're available all the time. And with that, tune in next time. Coming up soon, we're going to be giving you a little flavor of Evergreen, Colorado, my hometown, to show you how magical it is. So look out for that coming up soon.
Yeah, we know that, and we have a lot of people that watch this that are just moving to Colorado. So we're going to kind of just focus on some different neighborhoods to show you what Denver and the surrounding area has to offer.
Yeah, absolutely. All right. Well, thank you for joining us. Feel free to click the
Bye.
link below to subscribe if you want to stay tuned. And otherwise, we will see you next time.
Bye.